Hello and welcome to the Decrypting Crypto podcast. It's July 10th, 2025, and this is Off Chain, our weekly recap of the biggest stories in the crypto space. I'm Matthew Howells-Barby, and as always, I'm here with Austin Knight. We're doing something a little bit different this week, Austin. We're trying our hand at figuring out how we live stream this to X. It may or may not be working, but we'll fumble our way along. How are you doing?
Hey man, 7 years into it, we got to try some new stuff, right? I'm doing well. I'm glad to be back. Bitcoin is looking pretty all right, so that's always nice.
Just touched a new all-time high yesterday. Just a slither, a little taste for us, but yeah, we're not complaining.
Well, hey, we've got some pretty cool stuff to talk about today. We were thinking we would do a deep dive topic on Bitcoin Treasury companies. It's a lot going on in that space.
Yeah, and I think there are some super interesting stats that behind like the BTC Treasury companies and the influence that they're playing on a lot of the price action we've seen. You know, we've talked a lot already on the pod about how the story so far this cycle, as far in as we may be, has been BTC dominance. And
yeah,
there's been couple of things really driving that. One that everyone is pretty familiar with at this point is the ETF flows, which have been very strong since the start of the year and especially the end of last year as well. And now we have this additional piece that we're starting to really see the benefits, let's say, of. We'll see if this is truly beneficial long term, but in terms of BTC price action, and there's certainly more to come. So why don't we kind of start from here, and figured I'd frame this with this stat, and that is that since the start of this year, Bitcoin Treasury companies, and we can explain a little bit about different types here. This is, both public and private firms that are directly buying Bitcoin for their own reserves. We'll focus today a bit more on the public companies, but they have outpaced ETF inflows to Bitcoin by BTC volume, and dollar amounts by pretty much like a little bit more than double. So Treasury companies in the first half of 2025 acquired close to 250 million BTC, 250,000 BTC, which is an enormous amount, a huge amount. And meanwhile, the spot BTC ETFs, they did about 111,000 of net inflows in the same time period. I'm looking at this kind of up to the end of June. And get this, Austin, this was what really took me aback, right? So we talked, especially through last year, how BlackRock had become an enormous holder of Bitcoin. Right? We talk about all the inflows. Let's think about like the holder base of Bitcoin. Across the ETFs, they now account for 6.8% of all total Bitcoin supply, which is pretty staggering actually when we realize, what was it, January last year, these things opened up. They've amassed that much. Well, public companies alone now hold a little over 4% of the total Bitcoin supply. That is...
It's like 3.5% of that just strategy.
Do you know what? So we'll dig in a little bit, but let me just bring up my screen here, because there's an awesome website, bitcointreasuries.net, and it tracks all of the different treasuries here across the different companies, you can actually see
Oh my gosh.
2.844% is strategy.
I wasn't far off.
You weren't far off at all there. It's a huge amount. You've got Marathon here, huge Bitcoin mining company. And I think what we're going to talk a little bit about, right, is these top two are interesting because MicroStrategy, or Strategy now, and Marathon are holding huge amounts of Bitcoin. Okay, slightly different scale, but they're the 1 and 2. 50,000 BTC by Marathon, best part of 600,000 by Strategy. But their approach is incredibly different, right? And that's where we talk about these two different types of Bitcoin treasury company. It might be worth we kind of just explain that piece first.
Yeah, so this question, I think it's a natural question going into this. Like, what is a Bitcoin treasury? What's the difference between something like a strategy or a marathon? Really, there's two types of Bitcoin treasury companies. The first type is a leveraged Bitcoin treasury company. This is a publicly traded company that uses corporate finance tools like issuing equity or debt to accumulate Bitcoin as a primary strategic goal. And so this would be more like the strategy or Meta Planet. But then the other type is a company just with Bitcoin on their balance sheet. And so in this case, they hold Bitcoin, but it's not really core to their business model. So this would be closer to Tesla or Marathon, or if you looked at number 11 on that list, Block, the company that I work for,
right?
That we fall into that category because although we are, Block is an ideologically pro-Bitcoin company, it's not really playing the same game as Strategy, right? Which is Block is integrating crypto into its ecosystem, whereas Strategy actually is a crypto balance sheet in corporate form. That's basically what it is. It's like a proxy for crypto in corporate form. And I think that's an important distinction between these two types of Bitcoin treasury companies.
Yeah, and when we're going to talk today, we're going to kind of lump these two together, but we'll break out and talk about the different pieces because we're seeing this really sizable rise in, just like you say, companies wanting to hold Bitcoin on their balance sheet. Obviously the likes of Block, Kraken, Coinbase, all of those that are Bitcoin aligned companies holding that. And then you have Marathon, one of the largest BTC mining companies, but they're not like issuing debt to acquire the BTC and focus their whole valuation model around the premium on their net asset values and holdings in their treasury. Although that might play a slight role, it's much more about the underlying business that is, this is just a treasury strategy. Same with Tesla, that what we saw.
I would say as well, I think that the comparison to ETFs is really interesting because, we can just see we've seen this massive growth of ETF ownership of total Bitcoin supply. And, to compare that to what's happening with Bitcoin treasury companies, I think gives you a really nice reference. At the same time, this may even be bigger than just a comparison to ETFs, right? ETFs are neutral wrappers. Treasury companies are making conviction bets. That's a pretty big deal. So, when you're looking at this, institutional investors, when they're choosing companies like Strategy or SharpLink, they're doing so because they actually want leveraged directional exposure that has an upside from optional leverage like debt, equity, premiums, in some cases staking, which we'll get into later. And this could mark a power shift away from some of these traditional, financial instruments into corporate entities functioning as financial products themselves. So I think that watching that play between ETFs and Bitcoin treasury companies is important here because it's possible that Bitcoin treasury companies in the long term could potentially eclipse ETFs depending on the market's appetite for it.
I think it's an almost certainty. And I think the two, and we talk about eclipsing, right, in terms of the percentage of the supply they own. The piece here that I think is really important to hammer home is this is net new capital coming in. This isn't like, a rotation trade that's moving from within the crypto ecosystem to a different asset. These are companies that had no exposure, and now they are amassing a huge amount of exposure. And this is being highly concentrated into BTC. And we'll talk a little bit about some of the other assets potentially that are starting to come into this. But it's hugely accretive to Bitcoin's price. And I would go as far to say that these two inflows, ETFs and Bitcoin treasuries and treasury kind of leverage-based strategy companies, are the two, by far and away, almost the sole driver of all of the BTC price action that we're seeing. And it's, in the history of Bitcoin, it's unprecedented. Now, there's no doubt some pretty big philosophical questions that we need to ask as a community around Bitcoin as to whether this is good for Bitcoin overall. But if we kind of just park that a little bit, and what I want to talk about is like, why have we seen this explosion? Why now? And I think there's a few things at play. Strategy in particular, as in MicroStrategy, clearly paved the way here. This isn't new to us. We've mentioned the Michael Saylor strategy play over the years several times, and that has evolved in the way in which that they've acquired their BTC holdings. And while I don't want to go into too much detail on the dynamics of their issuance of debt and stuff, because I think that's been covered a lot, we have seen an evolution in the way that strategy issues their debt. And this is a playbook that most of these other Bitcoin kind of leveraged strategy companies are, treasury companies are organizing themselves. And what we saw initially was like, okay, their strategy would issue debt that was a convertible debt. So it could be converted from debt into equity at any time. It would usually have like a zero interest rate on it. And they were raising huge amounts. Now they've started to change up their approach a little bit. They have now been issuing various types of like equity and debt instruments, taking on some larger interest payments that they have to think about as well. But they've just built and amassed this huge amount. I mean, they just registered an unrealized gain, they announced this week or last week, of $14 billion on their BTC holdings. It's phenomenal.
It's unbelievable. Yeah.
It's
really amazing to just consistently over and over and over again with this company, you're seeing these huge numbers of buys, huge numbers of gains, big bets that are happening. And I mean, you just can't, but like this whole time, there's this thought looming in the back of your mind, which is like, is this a house of cards that could potentially fall? And so far it like hasn't, but I mean,
the thing is, there is, and I think this is the underlying question, and what we're going to discuss a little bit, is there is currently a virtuous cycle. Right? There is the other side of this coin that can be an extremely destructive, negative cycle, a spiral, right? But strategy have rolled out and remained convicted in this approach for such a period where they've amassed so much that the virtuous cycle has enabled them to just grow bigger and bigger and bigger and reduce their risk of this all kind of falling apart. Now, what does that mean? And why, over time, has this helped them as they've accrued more and more? Well, these companies, not the ones just holding Bitcoin on their balance sheet, but these companies that are taking these leveraged bets, like you say, Metaplanet, Strategy. We'll talk about ETH as well with things like SharpLink and others. But they're being valued at a huge premium to their NAV, so their net asset value. So we take these companies and you say, okay, MicroStrategy have, what was it? Was it 600,000? Yeah, just under 600,000 BTC. And you could say, okay, well, the value of that company should just be the price of that BTC, and then maybe just any of the like relatively insignificant software revenue from they are still also a software company. I don't know how much of that they do. They probably do sub 100 million in revenue, something like that. But they don't. They're valued at a huge premium to their net asset value. This is incredibly attractive for investors, and in particular for the company. And it's because this is where this moat that they're building comes in. Because why Strategy versus Metaplanet, right? For example, well, they have now the ability to raise capital at a premium to their net asset value, which means they can issue shares at prices way higher than like the actual underlying value of Bitcoin. Then what this means is even during like volatility, downward price action, they have this buffer where like, issuing new equity is accretive. Like if you break this down, it's like, Strategy, they give investors like leverage exposure to Bitcoin without having to use margin, like from the investor perspective. If we go back to prior to the ETFs, that alone was like the value prop, right? Because it was like, hey, I can't get exposure to BTC. It's like Strategy was the premium in the same way that prior to the ETFs, you had, like the Grayscale Bitcoin Investment Trust. And we would talk a lot about the NAV premium that they had there. Well, as Bitcoin rises, the equity value of Strategy increases much faster because you've got BTC appreciation on a large balance sheet. The fixed debt costs that they've issued this debt around, they don't scale with BTC price. So as BTC appreciates, their debt that's associated to that BTC price does not rise in tandem. It is a fixed rate. So, if BTC doubles, Strategy's NAV is like, it may more than double, for example, because the debt remains the same. And then, this is all wrapped together in the fact that we had this huge regulatory unlock since the Trump administration's come in. And now we're seeing this huge explosion. So I think it's just given everyone the confidence, first of all, plus like things like SAB 121 as well, loads of other regulatory frameworks enabling companies to hold Bitcoin easier. And now they have this playbook for these very specific vehicles that are being spun up to take these leverage bets.
Yeah. I mean, is this basically a new asset class? Because if you think about it, like Strategy it's not behaving like really like a business anymore. It's effectively a structured product with built-in Bitcoin exposure. They're moving away from their software business. That's why they rebranded from MicroStrategy to Strategy. If they trade like a Bitcoin call option, they almost kind of start behaving more like a derivative investment than a tech company, right?
Agreed.
And then, like, just as a provocation, I don't really think we can get this far into it in the span of this episode, but like, what happens if we start to see ETFs that hold Bitcoin treasury companies as part of their allocation strategy?
It's a matter of time, right? And and then you get the 2x leveraged ETF on the leveraged Bitcoin company. You know that this stuff is going to start happening, right? And this is when we start to get a little bit scary, when we're leverage looping. And you talked about the house of cards. I think that Strategy have been very effective in the way that they have managed the scaling of their company and their treasury. Make no mistake, there is a huge, Saylor in himself is absolutely a pioneer, right? Regardless of how this plays out, he created this, new class, this new asset class, almost this whole new approach, and fought through basically a wall of contrarianism and powered through while everyone said he was crazy and it was all going to fail. He maintained his conviction through real financial innovation as well.
Yeah.
I think what we are going to see is some big differences in the effectiveness of the execution of different companies looking to mimic this. And where I think let's come back to some of the risks here. But what I think my view, or actually let's dig into some of the risks a little bit here. My view here is like, for these Bitcoin treasury companies, there is obviously a huge amount of systemic risk we're building. And to your point, as we start to spin up layered derivatives, ETFs and leveraged ETFs, and we start to like get further and further removed with more and more leverage in each of the layers, we increase this potential risk. Ultimately, like, what is the risk here? So I thought Franklin Templeton did a great report. The Block covered this and gave a bit of a summary around it. But the reality here is like understanding and illustrating the death spiral that could happen here. It's not that difficult. We've seen some of these in crypto before, just in very different flavors. But realistically, right? So like if the market value, the market to NAV ratio falls below 1. So you got the market valuation of the Bitcoin treasury company, and then the net asset value of the Bitcoin that they hold. If the market value of that company dips below the net asset value, then issuing new equity is dilutive. This is very problematic because the companies are no longer benefiting from the primary purpose and benefit of these companies to be able to like raise additional capital without kind of like harming existing shareholders, creating like huge problems in just like the actual structure of these businesses. So they struggle to raise additional capital, but they have to do something about the falling market value of the company. Well, they hold all these assets. If crypto prices dramatically fall and compound on this, what we could really see is a very negative feedback loop. This is then when companies may be forced to sell their assets when like in order to like defend the stock price, the market valuation of the company, to get back to this premium to NAV, so that then they can issue more debt or equity. And what this is going to do then is the bigger these clips that are being sold of BTC, the more negative price action it could incur. But this really depends on the size and scale of their BTC holdings. So I think for BTC, if this was strategy we were talking about, and strategy had to unload big chunks of their BTC, this would be extremely bad for BTC. Yeah. And you're setting up dominoes, I think, a little bit, where it's like, if strategy are under duress and they eventually did have to sell all of their BTC. By the way, we're talking about the worst case scenario in all of this. That's going to impact all of the rest of the BTC treasury companies, because there's going to be huge whiplash in the equity valuations and market perception of all of these BTC treasury companies. There'll be a huge sell-off, all of their share prices depressed. It will affect the whole cohort, and then you'll see mass selling and this death spiral. Now, a lot has to happen to get to that. But what about if we're not talking about Bitcoin treasury companies and we're talking about slightly smaller cap assets, assets with slightly less liquidity? Then I think we start to get into really much more precarious situations. We've started to see ETH treasury companies coming up and Sol treasury companies popping up. Just to be clear, I think these are also very big assets. But I did start seeing that one company is like becoming a hype, as in a hyperliquid treasury company. It's still a big asset, but still, no matter how you feel about hype, it's new and less proven. So we could see some of these things come up. And I think with that, I don't know how you feel, Austin, but it feels like regardless of how likely you feel this risk to be, if there was going to be a major black swan event, another, it's probably related to the formation of these companies in a few years' time.
Yeah. Well, look, I think that sort of virtuous cycle that you were talking about, this positive feedback loop, it works both ways until it doesn't, right? As long as Bitcoin goes up and equity issuance is accretive, then treasury companies are incentive to print stock to buy more Bitcoin, and that's going to drive the price further. But of course, that's powerful, especially with multiple firms doing it at once. It's not totally sustainable. One thing that I'm kind of anchoring on is that I think this ultimately is a bet on monetary regime change, which of course is very aligned with the incentives of Bitcoin itself. These companies, they're not just chasing alpha. They're hedging against dollar debasement, central bank policy, structural inflation. And so if you believe that fiat currency is headed toward longer term debasement or debt monetization, then it does make sense to have a Bitcoin heavy balance sheet. It isn't just speculation. It almost becomes like a monetary strategy. And so for conservative or macro minded investors, this is maybe akin to holding like a 21st century digital gold standard wrapped inside of a corporate structure. And I think that like that has some real value to it. That's a strong value prop. I think, earlier you were alluding, Matt, to like strategy and Michael Saylor, like go just breaking through wall after wall of doubt. And really always being like the first mover here and almost like carving out this category uniquely. And in that respect, I would almost view strategy as like, even though categorically it may share some things in common with some of these other 144 or so players, it almost is in a little bit of a league of its own. It's like the Bitcoin of Bitcoin treasury companies or something like that. So it's hard to talk about these like they're all the same thing. But when we talk about these risks, immediately it starts to make me think like, what makes this any different than the .com bubble or something like that? I think that one, strategy and these other players are actually holding Bitcoin, unlike many .coms that were, basically they were like selling a promise in a website or vaporware or something like that. Bitcoin is real collateral. It's a real asset, despite what some of the naysayers may still think. It is real collateral. It's a real asset. And in some cases, like these Ethereum and Solana companies that we're about to talk about, it's actually they're yield generating treasuries via staking. That's something that you don't even get with gold.
Well, I think that's a very interesting part. Let's come back to that after as well.
Yeah. Well, I do want to say, despite all of this, just like with the .com boom, something that I definitely think this is going to have in common with the .com boom is that we're going to see copycats and vapor companies. And so you have to watch out for these junk companies that are issuing stock to buy crypto without a real business model or strategy or experience in the space and understanding of it.
And bear in mind, it's combined with a lot of stigmatized methods, right? We've seen this huge resurgence in SPACs. Companies going public via SPACs. A lot of them are these leveraged like Bitcoin treasury companies. But it is also worth kind of calling out, and before we get into like the ETH and Sol stuff, we talk about this like domino effect, et cetera, et cetera. The largest majority of the number of companies, in our list of, not by holdings, but by the actual number of companies that are in these Bitcoin treasury group, most of them are just holding Bitcoin on their balance sheet. They're not taking these leveraged bets. So by and large, we shouldn't see the same kind of like selling action. You're not incentivized in your Bitcoin treasury to sell and offload some of the BTC as price declines. This is not what you're incentivized to do. So I think that's another important thing. The other thing is, we talked a lot about companies. What about countries? The US holds around about 200,000 BTC. You have China holds just under 200,000 BTC. The UK in a close third. What a bunch of legends. And I was reading this really fascinating story that honestly could be a whole episode in itself about Bhutan, which are the 5th largest country by BTC holdings. And Bhutan have this incredible story where they're a very small nation. I think, I may be getting this wrong, but I think their population is like 100,000 or something like that. Bhutan population. Sorry if anyone from Bhutan is... okay, 700,000. So it's small, very small. And most of the Bhutanese, I'm not sure, economy comes through tourism. And during the pandemic, this very small economy of 700,000 people really suffered. GDP shrunk. They saw quite a lot of, I think it was something like 10% of the population in outflows just left the country. Crippling for a country, especially of that size that was so focused on tourism. But interestingly about Bhutan, they have a huge amount of hydropower. It's kind of a big source of all of their economic output comes from energy formation, and through, in particular, clean energy, hydropower. And one of the members of the government, I can't remember exactly who it is, they decided to build out, I think, like a sovereign fund. But effectively what they did is they said, well, why don't we try and monetize this energy through Bitcoin mining? And none of them had a clue about Bitcoin mining. I was like listening to this interview with the now head of the kind of the fund that manages all of this, and he was literally saying he like set up his own computer in the like government offices trying to manage this, and they set up a load of these mining rigs, and it was creating so much heat that they got like complaints from like the facilities manager and had to go in and figure it out. And then eventually, what they've actually done is they've amassed this enormous treasury now, especially by their standards. I think something like 20,000, 13,000 Bitcoin, all through this bet that they made. Sorry for going off on this massive tangent. I think it's a super interesting story that people should dig into. But the point is, we're also seeing these sovereign funds amassing huge amounts. And the more that corporations do, the more that countries will. And we just further kind of get onto this path of, Bitcoinization, if you like, that's fueling this slightly lower volatility, a lot of the supply held in long-term storage, so to speak, despite the downside to this, which is a significant reduction in individual holders as a proportion of the total holdings.
That's maybe that's like one of the big concerns, especially in terms of the principles of Bitcoin. But it's so interesting that you bring this example of Bhutan up, because this entire time that we've been talking about Bitcoin treasury companies, I couldn't help but think that Strategy, formerly MicroStrategy, is kind of behaving like a sovereign wealth fund as opposed to a traditional company, right? They're picking a reserve asset, they're taking a directional bet, and they're building influence. And it makes you question, like, well, what does that mean for nation states?
They hold 3 times the amount of the United States.
That's incredible.
That's unbelievable. They hold, actually, I think, this would be correct. They would hold more than the top 10 countries. Maybe they hold more than all countries combined. If the answer is no, they don't, it's marginal. That is unbelievable.
Yeah, that's incredible. So let's bring it back to ETH and Solana treasury companies. I think there's some really interesting stuff happening there. There are other crypto assets that are being added to these treasuries. Primarily, they are Ethereum and Solana, and they're on the rise.
Yeah.
For Ethereum, there's Joseph Lubin's SharpLink Gaming, and for Solana, there's DeFi Development Corp, which Joseph
bunch of my
and
old
some
buddies
of his other
from Kraken, actually. Joseph, who's the CEO of DeFi Development Corp, know him really well. Spent a bunch of time, great guy, and then a few of the other crew that built out. And very bullish Solana, that crew. I mean, SharpLink Gaming, Joseph Lubin, obviously one of the Ethereum co-founders, was behind the founder of Consensus. They're making big bets here. What was it? SharpLink's holdings that they have right now.
200 plus thousand ETH, like 205,000 ETH. And they, I mean, it's incredible. They acquired almost 8,000 ETH at an average price of $2,500 per ETH between June 28th and July 4th.
That's a lot
of this year. It's a lot. Yeah.
and the other thing within a lot of these. No, go ahead.
Yeah. Well, to fund this expansion, they raised $64 million through their ATM facility, selling 5.5 million shares. And so of this, $37 million is pending deployment for additional ETH purchases. So they've still got a lot
This was going to be my point.
Yeah.
There's so much, actually, in Bitcoin as well. Talk about all this that's in the treasuries. Loads of these companies have raised a ton, and they haven't deployed it yet. This is going to be a continuous wave. I think for things like ETH and Sol, where the price is going to move much more on smaller volumes compared to BTC, right? Because it's just an asset that's a multiple on the market cap. And I think there is a lot more risk that comes with non-BTC assets, because the likelihood of this price spiral is increased as a result. But there is this additional piece that you alluded to earlier, right, around staking. And I think that is going to become insatiable for investors in these types of companies.
I think it's really interesting. As I mentioned earlier, like that is something that not even gold could do. And if you think about it, treasury staking can become an operating revenue model. If you take these Ethereum or Solana heavy firms, they're not just sitting on crypto, they're monetizing it via staking yield. And this is an inverse of corporate debt. Instead of paying interest, the treasury is generating income passively. It's really interesting. It's like there's a future where, a treasury strategy and DeFi native yield strategies could merge into new kinds of operating models.
I completely agree. I mean, you just look at SharpLink. You mentioned their holdings. Since June, they've accrued 322 ETH in staking rewards alone. It's like, okay, that may not be like mind blowing, but there's a lot of upside to be had there, and it's securing the network in the same way, because obviously proof of stake being very different to things like BTC. So, what my prediction here is I think we're going to see some blow ups in the tail end. Wrong time to have a coughing fit, but let me just grab a water.
Okay, yeah, I do think about second order effects of this. Like what are we going to see happen down the line? What are your thoughts on that, Matt?
So I think with ETH and Sol, if this does really take off and we see more of these companies launch, I think it's going to be incredibly accretive to ETH and Sol price. I mentioned hype earlier as well. That might start to happen. I think we will soon see leveraged meme coin, bets starting to happen, and I don't love that, but I do think that there's going to be some blow ups. I don't think that it's going to happen to BTC in the short term. I'd be surprised if we see it happen with ETH and Sol in the short term. Long term, though, we'll have to see, and it really depends on how ingrained these assets become into corporate treasuries, into nation states, and I think overall, I'm cautiously optimistic.
Yeah.
This year, next year, I think it's going to be like a big bullish narrative, especially as we see more non-BTC treasury companies form and amass. But
Yeah.
I just hope we
think
don't
that,
have an episode in a couple of years' time where,
I know.
like our Lunar episode, our FTX episode, the 3 hours episode. That's what I'm
Yes.
hoping doesn't happen in all of this.
Yeah, I don't want to see Sailor sitting next to SBF in a New York prison.
No, I don't want another.
But
I don't want another $32 million dollar super yacht going on the market.
yeah, I do think that there are some, but beyond just those like downstream effects on, the crypto assets themselves. I do think there are some second order effects that could be interesting to watch out for. Most of which I would say are just related to this discrepancy in price to NAV, net asset value. One thought, like, could there need to be some form of accounting reform as a result of this? Will GAAP, or generally accepted accounting principles, ever adjust to market crypto reserves? Because if not, these companies will just continue to trade far above book value due to the structural underreporting of their treasury value. I think that this could also, like, maybe this could create some form of a treasury arms race. Will, like, more traditional Web 2 firms start creating crypto subsidiaries just so they can gain access to like media attention and capital premium? Is this going to have some type of an implication on mergers and acquisitions? Like, could a company like Strategy become an acquirer simply by printing overvalued stock? Because that's what .com firms did in the 2000s. The playbook is definitely back, just with Bitcoin instead of, as I mentioned earlier, like websites and vaporware. I think that
it definitely has a lot of the areas, like a lot. Whenever you look retrospectively at any bubble, the early formation of the bubble mirrors the patterns of what we're seeing in this kind of capital formation. That is not to say that this is a bubble. I'm merely referencing the fact that there are many similarities with how they form. And I think that is a very important thing to recognize and call out.
Yeah, absolutely. Nevertheless, like, this is, I think we can all agree, man, like, MicroStrategy, Strategy, Sailor, they continue to just frickin' crush, man. And this space,
you're just impressed at this point.
Truly. This space is basically exploding off of the back of that, I think.
It was a category forming moment, and I actually think, if we just take a step back and like forget the will this blow up? Will it be bad for the price, right? And things like this. I do think the most important question that we have to think about long term is all of what we've seen in the past 18 months, anchoring really around like the ETF approval, a net long-term positive for the decentralization of money, right, and capital. And without doubt, the ETFs, corporate treasuries, the Michael Saylors of the world, all of this has advanced the proliferation of Bitcoin and crypto as an asset class. It has also objectively compromised its decentralization. To what extent do we feel is acceptable compromisation of the of it being decentralized, right? In the sense that more centralized entities own a bigger sway. You cannot make an argument that best part of 10% of the BTC supply being owned by a combination of corporations and ETFs does not impact negatively on decentralization in isolation. So when we eventually get there, is this do we arrive at the promised land of Bitcoin being, the global reserve asset? Let's just get really future thinking, aspirational. We look back at where we came from, and it's a case of, the old boss is gone and meet the new boss, same as the old boss, right? It's just it's a reshuffling of the same oppressive financial system and structure that we've sought to get away from. And I don't want to end doom and gloom here, but I think it's pretty bad. I think it's important that we do really think about this. Of course, both of us incredibly pro crypto, and I have been excited about the developments and the proliferation. I think it's incredibly practically hard to get to the lofty heights that we want to get to without integrating with the financial system of today versus isolating the financial system of today. I think Jesse, founder of Kraken, kind of said somewhat famously, you gotta build the bridge before you burn it. And I think that's a great framing for some of this stuff. But it's something that we have to pay close attention to. And I think so far, so good. But what I would love to see, especially outside of BTC, is more innovation starting to come to the forefront, especially in DeFi. I think we're going to start to see a lot of really exciting stuff in the world of DeFi, especially now that regulation has softened a bit around some of that. And we're in for, without doubt, a very exciting 12 months plus ahead. So maybe we wrap up there. I had to throw something positive in. I don't want to end on a downer. Hopefully everyone listening in live.
It's been a while since we've heard from Cynical Matt, so it's always nice to have a
comes out every now and then, just creeps out. But it has been a while. Wait till we get into Euphoria and I'm talking about the price of memes. All that's forgotten. Anyway, Austin, as always, it's been a pleasure. We'll be back next week. Hopefully, all of our live streaming went well, and if so, we'll do it again. All right, man. It's been a pleasure.
See y'all next week.